Hello everyone, my name is Mohammed Aljaber. Welcome to this video where we are going to go over exercise 6-3A of our Managerial Accounting course. So let's read the question together first. The question says, Boyle Company makes fine jewelry that it sells to department stores throughout the United States. Boyle is trying to decide which of two bracelets to manufacture. Cost data pertaining to the two choices follow. And here we have information for the cost of materials per unit for both bracelets, bracelet A and bracelet B, cost of labor per unit, advertising cost per year, annual depreciation on existing equipment. Now, what is required? What's required is three things. First, A, identify the fixed costs and determine the amount of fixed cost for each product. B, identify the variable cost and determine the amount of variable cost per unit for each product. And C, identify the avoidable costs and determine the amount of avoidable costs for each product. So let's begin with A and B. I will first start by denoting each cost item and deciding whether it is a fixed cost or a variable cost on the table itself, just so it helps me with compiling my answer for the two first requirements. Okay, so cost of materials per unit, first of all, it is a variable cost, so I'm going to denote it as VC. Cost of labor per unit, this is also a variable cost. Advertising cost per year, this one is a fixed cost, so we'll denote it by FC. And finally, annual depreciation on existing equipment is also a fixed cost. Okay, so to answer the first requirement, A, we're going to create a small table here with fixed costs, and then for bracelets A and bracelets B. The first fixed cost is the advertising cost per year. Advertising costs. For bracelet A, it's $5,000. For bracelet B, it's $3,000. And then we have another fixed cost, which is the annual depreciation on the existing equipment. Depreciation on existing equipment. For bracelet A, it's $5,000. And for bracelet B, it's $4,000. Okay, so now I could go ahead and calculate the total fixed costs for each bracelet. Total fixed costs, 5,000 plus 5,000, that's 10,000. And for bracelet B, 3,000 plus 4,000, that's $7,000. So that's the first requirement. Then B, we're going to do a similar thing, however this time for the variable costs. Variable costs for bracelets A, and for bracelets B. First, variable costs, cost of materials per unit. For bracelet A, it's $10. And for bracelet B, it's $20. And then we have the cost of labor per unit. For A, it's $15. And for B, it's also $15. Okay, now we can go ahead and calculate the totals. So the total variable costs $10 plus $15, that's $25. And for bracelet B, 20 plus 15, that's $35. Okay. Now finally, we'll go ahead and look back at requirement C. Identify the avoidable costs and determine the amount of avoidable cost for each product. So now we'll also, on following the same format, we're going to do a third table, but this time for avoidable costs. Again, for both bracelets A and bracelets B. Now we're going to look back at the data. Regardless of the data was fixed or variable, we need to see which of these costs will be avoided if the company decides to go for the other bracelets, right? So if the company decides to go for bracelet B, which of these costs will be eliminated, and vice versa, right? So the first thing here is the cost of materials per unit. If they choose bracelet B, they're not going to have to incur these costs, right? They're going to only incur $20 per unit, not the $10 that is required to produce bracelet A. So the first item, the cost of materials per unit, is also considered an avoidable cost. So we're going to list it here. Costs of material per unit. For bracelet A, it's the $10. And for bracelet B, it's the $20. Okay. Now what about the cost of labor per unit? In this scenario here, because the cost of labor per unit is the same under both scenarios, then the cost is a irrelevant information. It's not going to be affected whether the company chooses bracelet B or bracelet A. And under both scenarios, they're going to incur $15 to produce each unit, right? So we're going to skip this one and go to the third item, the advertising costs. Here, since it is different under each alternative, then it's not, then that makes this piece of cost a relevant information, and it is avoidable, right? If the company chooses B, they're gonna only incur the $3,000 instead of the $5,000. If they choose A, they're gonna incur the $5,000 and not the $3,000 to advertise bracelet B, right? So here, advertising costs. For bracelet A, it was 5,000. For bracelet B, it was 3,000. Last one is the annual depreciation on the existing equipment. And again, because the depreciation or the cost is different under each of the scenarios, so that makes this cost avoidable. So we're also going to include it here. Depreciation on existing equipment. And that was 5,000 under A, 4,000 under B. Okay. Now, back to C, identify the avoidable cost and determine the amount of avoidable cost for each product. Here, we can run the numbers and do the calculation, but it doesn't really make sense because we have a mix of variable costs and fixed costs. So it doesn't make sense for me to add them up or to total the amounts without knowing exactly how many units is going to be produced. That will be unreasonable. So we'll just keep the answer as it is with the list of avoidable costs and each cost item with its actual cost under each of the two alternatives. Okay, that would do it for this exercise. That would be the answer for the whole exercise. Hope you guys found this video useful, and I'll see you in the next one.